So let's get right into the topic today. As I mentioned, I want to talk about the business owner solutions, the big four, okay, essential strategies for business continuity and protection. So let's get into it, okay? But why? The big question is always why. Why business owners need planning? Okay, a lot of times people think, oh, they own a business, they're financially secure, they have it figured out. That is not true. Okay, first one, survival challenge. Most businesses don't survive the first generation. Okay, and this is starting to happen a lot more. Okay, we have this massive generation, a baby boomer generation. A lot of business owners, they're thinking about passing it on to their children or grandchildren. Some of them don't even want it. Okay, how about multiple risk? Death, disability, disputes, retention. We're going to talk about that. Protection strategies, increase creates the cash to protect value, right? So these are the big three reasons why business owners need planning. And this is where the high demand comes in. And this is where we come in as well. So here's the big four. We're absolutely going to talk about buy-sell agreements. We're going to talk about key person insurance. Okay, you might have heard of key man insurance. They changed it to key person to be politically correct. It's the same exact thing. Executive bonus plans, deferred compensation. Okay, a lot of solutions, but in our environment, I want to focus once again on these big four because these are the most popular and this is where we can help clients the most. Okay, so let's talk about buy-sell agreements. Okay, what exactly is it? Why do it? Smooth transfer of ownership on death or exit. Okay. Death is the most popular one. Imagine someone being a business owner, they have a couple partners, something happens to that partner. You want to make sure that the business is okay. It's funded with life insurance, not loans or fire sales. Okay. So, key one is life insurance. Buy sell agreement is a life insurance product. Okay. So, make sure you realize that protects both the surviving owner and the family. Okay, so let's give a good example of what it is. Okay, unexpected loss. Let's talk about two partners. One passes away suddenly. That is a big blow to the business. Okay, think about a law firm, dental practice, small business owners. There's typically two, three founders. If something happens to one of the founders, that business takes a big blow, right? So we want to make sure that that business is protected against unexpected losses. Okay, especially if one business partner is great at operations, great at management, but one business partner is great at sales. If something happens to that business partner that's wonderful at sales, well, revenue really starts dripping, the business gets hit hard. Okay. Family needs. Surviving spouse wants full value for shares. Okay. This is a lot more common than people realize. Okay. So imagine you have a dental practice and you have two dentists. One is an orthodontist, one specializes in surgery, and one of the dental owners passes away. Well, if it's 50-50 ownership, that the one that passed away, the shares now go to the wife because she gets it due to marriage and she wants to cash out of the business. That's going to create a dispute between the existing business owner and the wife because she says, we need to sell the business. I want to take the cash. I don't want nothing to do with the dental practice. So this is a big issue, right? Because the wife has legal rights to the business. She is now a 50% owner. So a buy-sell agreement takes care of that dispute. Okay. So think people that are married, business owners, founders, this happens a lot more than you realize. Okay. The solution, insurance provides instant liquidity to complete that buyout. Okay, so maybe they do assessment. They say, okay, this dental practice is worth 5 million. Wife wants 2.5 million cash now. Instead of selling the business, she now gets a death benefit from the dental practice of 2.5 million. She gets her money. She's happy. The existing business owners is able to stay in business. Okay, so buy sell agreements, quite popular. Think dentists, lawyers, small business owners, restaurants. These are the types that it really comes in handy. Okay, especially in today's environment where we're talking bigger money. End of the day, it's a life insurance policy between the business. That's a buy sell agreement. Quite popular. Every company we do business with, they have marketing material that's on their agent portal. So make sure you get access to it. Okay. The next one on the big four. How about key person insurance? Okay. This one is different than buy sell agreement. Okay. Key person insurance is protection for critical talent, right? It says it right there. Key person insurance. Everyone has value when it comes to a corporation. To protect that corporation, especially covers the loss of a top executive or a rainmaker, right? Top salesperson, top these days, top coder, top business development. it's when you're building a business, you want to make sure that the best of the best is protected, right? Provides stability for operations and lenders. Okay, buys time to recruit and train a replacement. Okay, a lot of times people wonder, why do big corporations have life insurance on their employees? That feels pretty like evil, right? I know Walmart went through this, I believe it was like 10 years ago now, where there was a big article about Walmart making money on people passing away, their employees. And Walmart's defense was, look, when someone passes away, yes, of course, it's not good. We feel bad for the family. But for a business perspective, it costs us a lot of money to train, develop, and hire a replacement for that person. Okay, because think about it, right? There's a job ad, there's human resources, there's benefits, there's training, there's development. It could cost on average $100,000 to $150,000 to train a new employee. Okay, so key person insurance fills in that gap to give that company time. Okay, also it does lock in because we key person, it is a great benefit for law employees as well. Okay, so if you're doing well for a company and you have a family and you have kids and you say, look, I'm very valuable to this company. If anything happens to me, I want to make sure my wife and kids are taken care of. That company could do key person insurance, make sure you're covered. Okay, so let's go over an example. Critical role. Okay, sales manager drives 40% of revenue. This happens a lot in a small business. Okay, I have a cousin. He does extremely well when it comes to construction and contracting. He has several business people, salespeople in his company, but he has one or two that generates 80% of the revenue. So when him and I met, we definitely got a life insurance policy on his top salesperson. He wants to make sure that if anything happens to him, my business is going to lose 80% of revenue overnight. I got to make sure I'm protected and then he's protected. Okay. Business risk. Without coverage, the company risk collapse. Think about it. Imagine overnight, all of a sudden you lose 80% of your sales or revenue. Think about it even as a W-2 employee, right? Imagine someone gets laid off. They hit financial wall because they lose revenue right away because unemployment doesn't make up for the full paycheck. Same thing when it comes to business. If something happens to that key person and they're not protected, well, they're going to run into some issues overnight, right? This is where the life insurance policy comes in. The key person's family is protected, but also the business owner. Okay. Protection insurance provides cash to keep the business running, right? They get that influx of 100,000, 500,000, a million. Where we come in with the company is we customize and tailor that plan for that business specifically. Okay. So it's not like a business owner just gets a key person policy. No, they meet with us. We see the value of that person. We see how we could customize it, how much they're willing to protect. Do they want 1 million, 2 million, 500,000? So a lot of people do business with us because of that custom approach, right? They want to work with someone that could tailor it, customize it, understand their business, work with them, make sure that what they're doing is specific to what they need, not some blanket policy that they're getting from a big corporation, right? So that personal touch, people love that. Okay, so that's key person example. So those are just the first two. Okay. What's also quite exciting, so we did buy-sell agreements, we did key person insurance. Now let's spend more time on the executive bonus because could be life-changing for you as a licensed financial professional. Okay. The executive bonus, we're talking some key tax advantage strategies. And we've seen the numbers. Business owners, when they hit it big, they do quite well financially. They need to protect themselves from taxes. They also want to save extra for retirement. So executive bonuses are a great conversation to have with business owners, but I would cover the big four with them, right? Have the conversation of buy sell agreements, have the conversation of key person insurance, have the conversation of executive bonuses, also have the conversation of deferred compensation. Okay. Before we end today's meeting, I'll share a PDF of all the notes to give everyone a summary of what we did together to give you some key talking points so that you don't have to watch recording over and over, but now you know what the big four solutions are going to be. Okay. So we did buy sell, we did key person. Let's talk about executive bonus. Now, premium payment. Employer pays premium on employee-owned policy. Okay. So once again, it's the employer that's paying, it's not the employee, because that's what makes it exciting. It has a big tax benefit if structured correctly. Okay, we're not going to go into taxes today, but make sure that the executive bonus is structured in a way. And the companies we do business with, they're going to help you. Okay, they have sales departments, they have advanced marketing where we make sure that when we do it, we structure it so that executive bonus plan could be tax deductible to the company. It could be Rule 162. There's other rules out there. And then employee benefit, employee gains coverage plus cash value growth, right? If someone is working and they're getting a good W-2 salary and they're getting their health insurance and they're getting a 401k, they're not going to say no to a company offering them additional bonuses. And we're able to set that up through executive bonus because there's a lot of great rules and regulations through life insurance products where you could give executive bonus where you don't have to worry about ERISA and 401k top heavy rules, right? These are why a lot of executive bonus are happening with business owners. Okay, so let's cover it. Now, let's say there's a $10,000 annual premium. And typically with the executive bonuses, we're talking about bigger numbers here. Okay. We're not really talking about a $5 a month policy, $200 a month policy. We're talking about executives that are doing quite well financially and they max out their 401k. They're looking to invest and shelter from taxes. We talk about the executive bonus. Okay. So let's say this one has an annual premium of 10,000. Okay. Really two big benefits to the company. Okay. Once again, you get deduction for the company. You get a benefit for the executive, and it doesn't have to be on one executive. Okay. Imagine you have C-level executives. Let's go back to a law firm. The lawyers and the C-level execs are billing out for $500 to $1,000 an hour. They're making a quarter million to half a million to a million a year. They have a lot of employees though, right? They have, admin staff, they have marketing, they have paralegals, and they're telling themselves, look, we can't bonus ourselves that much money because of ERISA and 401k top heavy rules. We need to figure out a way on how we could pay ourselves more and minimize taxes. And then they meet with us, say, look, are you familiar with the executive bonus plan? Okay, because the way the rules are structured, you and the C-level executives could bonus each other $10,000 plus whatever you want to do. We could customize it. It's a benefit to the company because you get your tax deduction. Also, it's a benefit for the executive. Okay, so if you look up life insurance and executive bonus plans, especially at the C level, even on the publicly traded companies, if you really look at the financials, they're bonusing each other a lot of money when it comes to their life insurance policies. Okay, we're talking some companies do millions of dollars and it doesn't go against their income. So they don't have to pay taxes on it, right? So if you've ever wondered how, high affluent, wealthy people are doing it, so, how they minimize their taxes. Well, they minimize their income, but they bonus themselves in a lot of different strategies. This is one of them. Okay, so not only do they make extra money, they get that good benefit for the company and the executives, but what it also does is it creates a lot of loyalty. Okay, the industry calls this the golden handcuffs, right? When you're taking care of your employee by giving them profit sharing, bonuses, life insurance, a lot of perks, it's much more difficult for them to leave, right? Now, it depends on the company, right? Loyalty is such a big thing that unfortunately, if you look at what's going on right now with AI and Meta and these companies, this is why Meta has to bonus people. I think it was like $1 million or $1 billion to join them in the AI, is because they have to incentivize people to move over, right? But this is a great way for a strong law firm, dental practice business to lock in their key employees, create that loyalty. Because my opinion, it's all about loyalty, especially with a business owner. Okay. When you're working with someone for 5 years, 7 years, 10 years, 20 years, the money might be good, but at the same time, if you have a relationship where there's loyalty, it makes life so much better. And in the long run, they're going to end up making a lot more money too. Okay. So have that conversation with your clients is look, we could bonus you, deduction, lock in your key employees, your business partners, create that loyalty. It's going to go quite well. Okay. Now, what's also great about it is remember, you could do this with your license once again. Okay. A lot of times, I remember when I first got started in the industry, I used to think that you need a securities license to even have this conversation. Because I used to think that the only way you could do executive bonus and these type of situations is you needed a securities license. That's not true. Okay. We're doing it through a life insurance product. And what's great about the annual premium, remember that cash value that you're getting that client, it's going to grow tax deferred and they get access to it tax free. And then we could also structure so that cash value will get credited based on an index. So not only are we getting them additional bonuses, what we're also doing is we're building them a full financial plan. They have their 401k, they have their IRAs, they have their variable strategies. What's also missing is now you have a guaranteed strategy indexing with that floor. tax-free access and life insurance. And another kicker we could add is we could also add a long-term care rider to the policy too. Okay. So this is why what I said earlier is not only are we doing life insurance, we're also doing full service financial planning, but you got to think like a financial planner utilizing that license that you have. And this is our specialty. Okay. More than ever, people want to work with people that are specialists. It's okay to say that you specialize in insurance-based financial planning. That's going to separate you from everybody else. We do executive bonus plans. Okay. We do buy-sell agreements. We do key person insurance. Has anyone had this conversation with you? Odds are most people have it when it comes to business owners. Okay. Most advisors are so focused on the security side, they miss the buy sell, the key person, and executive bonus plan. Okay. Now, the fourth one, which is also quite exciting too, that we're able to do with our license is what's called a deferred compensation plan. Okay. This is typically set up for business owners as well, C-level executives. But once again, I want to stick with the big four solutions, but deferred compensation, future income promises. Okay. I know we tell the story all the time about, look, how the pension is starting to diminish when it comes to the workforce, right? The years of putting in 10, 20, 30 years for a corporation, them guaranteeing a retirement, those days are obsolete. We cover it on our career workshop. We cover on the business platform overview. The data is not good, right? 9 out of 10 Americans have to save and invest for their own retirement. But here we set up the business so that their key person, their executives, they get deferred compensation where we could set up that pension plan and you could do it with your license, right? Quite exciting. Okay, so let's talk about deferred compensation. All right. So once again, it's a future promise, promise of future income for key employees. Okay. Once again, it's typically key employees, right? Most business owners aren't going to set up deferred comp for everybody, right? They're going to do that 401k, simple IRA, SEP IRA, 403, 457. They're going to set that up for everybody. But for the key employees, they definitely want to take care of them, right? We have buy sell, we have key person insurance, we have deferred compensation. Okay. Notice how I keep saying C-level business owners because this is what the solution is really for. Okay. It's typically not for the masses, it's for the business owner and executives. Okay. Flexible design, not a qualified retirement plan, more flexible. Okay. So that's a big one. So when you're having conversations with the client, because an objection you might get is, well, we already have a 401k plan. I already have my compensation set up. I'm doing profit sharing, I'm doing a match. My employee's happy, I'm happy. I could do 28,000 a year. I could profit share myself. Like, I don't think I need a deferred comp plan, right? Then when we show them what we could give them and the funding method of, look, well, how's your life insurance? Most business owners don't really think life insurance through the company. Okay. They're thinking on the individual side. Most of them say, well, we don't have that set up, right? So here's the conversation. Yeah, deferred compensation. Okay. Funding method, life insurance often used to back the promise. Okay. So notice how I keep having a conversation of utilizing a life insurance product for exactly what they need. We know they need key person insurance. We know they need buy-sell agreements. We know they want to do a deferred compensation, and we definitely want to know that they want to do a executive bonus plan, right? But they're thinking security, security, securities. They're not thinking life insurance plan, and this is where we come because life insurance is much easier conversation. Death benefit, long-term care, and the account that doesn't go down in value and you get access to it on a tax-free basis, right? They're not thinking that. They're just thinking security. So this is where we come in. Another example, okay? So let's say we have a key example, a key executive, or maybe it's an up-and-comer, right? I know I've been seeing C-level executives, business owners. A lot of times they might be thinking long-term. Maybe they're thinking business succession plan, right? Like I mentioned earlier about the baby boomers all retiring. They're all business owners. They're looking to sell their business or pass it on to somebody else. And maybe they've been mentoring and developing someone to say, you know what, I want this person to represent my company. I like what they're about. They understand the culture. They've been working with me for 10, 20 years. They might not be there yet, but when I do plan on retiring and leaving the company to this person, what's a great way where I could lock them in, create that loyalty? A deferred compensation is a great way, right? Because a company could promise you, look, you keep working for us. I promise you 50,000 per year for 10 years after retirement. If you stay with us, it creates that loyalty, that golden handcuff. Okay, this happens a lot more than you realize, but also demand is quite high, right? If I'm working for a company and they promise me, man, if I keep doing what I'm doing, not only do I have my key person insurance, I have my executive bonus, but now they're setting up a deferred comp plan for me where I know that as long as I stick with this company, they're guaranteeing me $50,000 a year for the next 10 years or 15 years or 20 years, plus my 401k. I'm in really good position, right? This is why companies do it. Okay, so in this example, we're looking at 50,000 per year for the next 10 years. But how's it funded? Okay, it's actually funded once again with a life insurance product, not term insurance. Okay, this one is funded the executive bonus and a deferred comp plan. This is funded with permanent life insurance. Typically, we like to use index universal life. Why not? That's structured to get 6 to 8%. We could add a long-term care rider. Some companies want to do whole life. We could set that up as well, right? But this isn't set up with a term life insurance policy. Reason being is, remember, in term, there's no cash value. The company is simply renting coverage, right? So the key man or the key person and then the buy-sell agreement, that one is typically set up through a term policy, right? Just in case something happens short term. But the executive bonus and deferred comp plan, this one is definitely set up with a permanent life insurance plan, whether it's whole life or index universal life. We specialize in index universal life. In my opinion, is the better of them, 6 to 8%. Long-term care rider, strong A-rated companies. You can add a lot of extra money to it. This is what's great about the deferred comp plan, right? Employee stays to vest or risk losing the benefit. That's where those golden handcuffs come in, okay? Because if an employee is doing well, it's very difficult for somebody to decide to switch companies if they have a benefit of $50,000 a year for the next 10 years, plus their other bonuses, okay? So it keeps that, that loyalty once again, and this is how we're really helping clients, okay? Now, discovery questions for business owners. These are some great questions. Do a screenshot. Okay. Make sure you write these down. And notice they're open-ended questions. Okay. They're not yes or no questions. It's getting your business owner thinking. Okay. What happens if you don't show up tomorrow? Think about that. Okay. Imagine if you have a business and you're generating revenue and your top salesperson shows up, or how about your top dentist isn't there? And you have all these patients thinking, wait a minute, I like this dentist. I've been with them for 5, 7, 10 years. All of a sudden they're not here. Well, that's going to hurt revenue, right? You have utilities, you have rent, you have brick and mortar, you have to rent out those chairs. And then now that dentist isn't there, you have to find a replacement. So they could take months before you find a new dentist, right? And that's lost revenue for that company. So that's where the buy sell comes in, and that's where the key person coverage comes in, right? So who in your business is irreplaceable? Get someone to think about it. Okay, this isn't big corporate America, right? Remember, in big corporate America, people are replaceable. There's a lot of people that are there. They could put a job posting, get tens of 15,000 applicants. Big corporate America is okay. But even big corporate America does key person insurance, right? Because it costs that money as well. But it does hurt the small business owner a lot more. Okay. Think about, yes, I've been talking about salespeople because that generates revenue, but there's also so many key people that are so good at operations, mentorship. They're great at human resources. They're great at code, at bringing the team together. There's a lot of value there, right? So who in your business is irreplaceable? If you're talking to a business owner, maybe it's them. What happens if something happens to you? Is your family going to be okay? Who's going to run the business? Who's going to take it over? Do you have key salespeople, key operations? How many employees do you have? Okay, these are great discovery questions. How do you reward your best people so they stay? Wonderful question. Are you doing a pizza party? Are you doing a fun event? Okay, people don't like that, right? People, end of the day, that are working hard, the ambition one of the best ways you could award them is give them a bonus. If you're getting them extra 10,000 a month, 50,000 a quarter, 100,000 a year in bonuses, this is how these big corporations recruit each other. Business owners could do the same thing, right? Especially if they have kids, makes it so much better. So how do you reward your best people so that they stay? Ask them. It's open-ended. See what they say. Okay. So, well, how would you think your employee would feel if you gave them executive bonus where they have life insurance, they have long-term care, it's a deduction to the company. You could promise them a pension for the next 5, 10, 15 years, however you want to structure it. give them these golden handcuffs, right? So discovery questions are quite fantastic. So make sure you do a screenshot on it. Okay. Now, wrap up. Remember the big four. Buy, sell is to really protect the ownership. Key person protects revenue, right? Salesperson, executive bonus rewards talent. Deferred comp retain talent. So notice how each one does something different. This is why the big four, okay? Buy, sell, once again, protects ownership. Someone gets married. Someone passes away. Oh, couple partners. You want to make sure that the ownership stays within the company. Key person, salesperson, operations, manage others, right? Protects revenue, executive bonus, reward the talent, golden handcuffs, loyalty, deferred comp, retain talent, okay? Because it's much easier to retain someone when they know they're going to get a pension at the end. Okay, so thanks for watching. If you found this helpful, hit that subscribe button today. And if you're ready to take the next steps, feel free to schedule a discovery meeting with COR Financial Partners. Until next time, take care and keep building smart.